It's ironic how, when things are on sale at your local store, everyone is happy. But when stocks are on sale, it's seen as the worst thing that could ever happen. Since the beginning of this year, the stock market has given us many opportunities to be happy, or glum, depending on how you look at it. For instance, the Dow Jones is currently down 6.85%, the S&P 500 is down 9.33%, the Nasdaq is now in correction territory, and the lowest of them all is Bitcoin, which has lost almost half of its value from its all-time highs. And what's everyone's reaction? People are panicking left, right, and center. Even famous YouTubers are selling out of their entire portfolios. During times like this, when the market just keeps on dipping and there's panic everywhere, there are several questions investors begin to ask. Why is this happening? When will this downturn end? What should I do? Should I start selling my stocks? These are the questions we'll try to address in this video. Welcome to Cent Essential, and let's get started with the most asked question, which is, why is this happening? The reason this is happening is a complex combination of the following: high inflation, anticipated interest rate hikes, instability in Ukraine and Russia, a stock market that was overvalued to begin with, and so many other reasons, including a bearish market sentiment. We can spend hours exploring the many reasons why this is happening, but this is the wrong question to ask. And this is because market sentiment is constantly changing. Sometimes it's very bullish and everyone is buying up all they can, pushing prices higher and higher even above their intrinsic value. And then there are times like this when the sentiment turns negative for just any reason, including the reasons we mentioned earlier like inflation, rising interest rates, and geopolitical tensions. So the market never falls because of just one reason. It's often a result of multiple factors, most of which are not even reasonable because of human psychology and emotions. Peter Lynch, one of the most prominent investors in the late 80s and early 90s, noticed a correlation between investor emotions and the stock market performance. He explains how investors, after a long work week, would watch a lot of cable TV on the weekend, get scared, and then sell stocks on Monday.
1955 to 1985, the stock market went up a grand total of 1,000 points, but it was down 800 on Mondays. So it was therefore up 1,800 on non-Mondays. It wasn't an accident. The stock market went down. October the 19th, 87 was a Monday. People over the weekend become economists in portfolio strategy.
This has been happening a lot recently. Investors are watching everything that's happening in Eastern Europe. They're keeping an eye on the quote-unquote inverting yield curve and talking about how a recession is imminent.
So I don't worry about that. I know we've had 96 years of century, and the market's fallen 53 times. We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, we have a 10% decline. Of the 53 declines, 15 have been 25% or more. So 15 in 96 years, about once every 6 years, the market falls 25% or more. That's what we call a bear market, you know that. And it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen. It doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with.
Peter Lynch here says that market corrections and bear markets will always happen, and he's not concerned about what happens in the short term. What he knows for sure is that in 8, 16, 20 years, good companies will have grown their earnings immensely. And that's all that should matter to you as well. The next question investors often ask is, how long is this downturn going to last? When is the bottom? This is yet another wrong question. The reason being, nobody knows. CNBC won't tell you, investing gurus won't either, even YouTubers cannot tell you exactly when the market will bottom. It's almost impossible to time the bottom of a market. Trying to catch the market at its lowest dip so you can buy won't work. And that's because such mentality always convinces you that the market is not yet at its bottom. It will keep on dipping, you tell yourself. And so you keep waiting. the market hits the bottom and starts to rise again, and by the time you realize it, you've already missed out on the opportunity. So asking when the market will bottom is not a good question to ask. However, here's a good question investors ask. What should I do now that the market is crashing? The first thing you should do is nothing. Do nothing at least for a while. And here's why this is important. We don't like to admit it, but as human beings, we're all subject to the same human nature. When we see fear and we see other people sell out, we feel we should do the same. Unfortunately, it's tough to react differently. So I encourage you to do nothing, at least for a few days. Don't even look at your portfolio because fear is real out there and you're not immune to it. During these fearful times, the worst thing you can do is look at your portfolio, see how much you're losing, panic, and then sell. Remember, you can only make a loss on your investment when you sell. The second and probably the most important thing you should do in every market downturn is this. Remember the basic truths. And here are the truths to always keep in mind. Number 1, market corrections are inevitable, but they never last forever. Check this out. This is a graph that shows the times when the S&P 500 crashed and then got right back on its upward trajectory. Number 2, it's impossible to time the market. If investors could time the exact peak and exact bottom of the market, investing would be effortless and everyone would be a billionaire. The third thing you should do during a market crash is know what you own. During times like this, it's very easy to forget that when you buy a stock, you're actually buying a business and not just the ticker symbol. So what you need to do is have a look at the underlying business and ask yourself the following. Does it have solid fundamentals? Is it still growing? Is the company innovating? Will the company still be relevant in 10 years? If the answers to these questions are yes, then hold on to this stock. The fourth thing you should do is think long term. As Peter Lynch said, he doesn't care about how terrible the macroeconomics look. Instead, what he focuses on are the long-term prospects of good companies. I like listening to this part of his speech every time I need to gain perspective.
No idea when the market's going to go down and no idea when it's going to go up. I'm totally shocked. The market was 4,000 2.5 years ago. A little while ago, it's 8,000. I had no idea about this. Very surprising to me. But I'll guarantee you the market will be a lot higher in 15 years. It'll be a lot higher in 25 years.
The fifth and final thing you need to do is see the situation for what it is, an excellent buying opportunity. Here's the best piece of advice I've ever had about investing. It's from Warren Buffett, and he says, "Be fearful when others are greedy and greedy when others are fearful." During times when there is euphoria in the market, when everyone is buying, saying that prices will go to the moon, that's when you should be cautious. But during times like this, when there is fear all over and everyone seems to be bailing out of the market, this is when you should be nibbling in a bit more and scooping up some of your best companies while they're still on sale. I know it's difficult to overcome your fear of investing in a falling market. However, if you can see it as a huge sale, you'll quickly realize that market crashes are the times when fortunes can be made. So if you have some money set aside that you won't need for a long time, load up on some of your high conviction stocks. Remember not to use money from your emergency fund or any other funds you'll need in the near future. And to answer the question, should you sell your stocks? Here's what I'd say. Selling out of fear is never a good idea, but there are times you would be justified. If you'd like to know precisely when you should sell your stocks, check out this video. Thanks so much for watching and see you again soon.